Okay, hello everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius Anucauskas. Today's the 21st of February 2019, so welcome everyone. Like I said, welcome to this Thursday afternoon session. We're gonna have a look at the markets, a few of the charts, just a very quick overview of what's happening right now with some of the instruments basically. But before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then let's jump into the charts. Now the first one I want to touch on here is Nikkei225. Now looking at this daily chart, of course you can see that the Nikkei continues to travel higher slowly, of course grinding, but still kind of the direction is still to the upside. It continues to trade above this downside resistance line, this short term, or should I say more medium term downside resistance line taken from the highs of October last year. And of course now it seems that it's targeting this 200 EMA here on this daily chart shown as the black line. So this area around that 200 EMA currently is currently near the 21,650 level. So of course this is the one that we're going to be targeting first, but if the buying momentum is going to remain strong, then of course a slightly better area of potential resistance could be seen near the 21,875 level. You can see that how well this played out nicely in back in the on the 13th of December, and also right here around the 15th 16th of November. So for now, of course, this is going to be that little obstacle that we're going to keep monitoring, where we will keep on monitoring if we see a nice good push above this 200 EMA. For now, basically, certainly it seems that could continue traveling further up here, at least for a little bit more. Don't get me wrong, our oscillators are suggesting that the market is already slightly overbought, but I mean, until we see a clear direction to the downside, still we are going to be aiming for higher levels. And especially, like I said, looking at this daily chart, we could see a nice good push higher and a test of this 200 EMA initially, or even actually a break of it and a test of the 21,875 level. So slightly above that, we do have some good areas of resistance, but of course let's go step by step. First, let's see what it wants to do with this 200 EMA, if it wants to initially touch it or not. If it wants to even break it, then wonderful, we will target the 21,875 level. If, let's say, this suddenly reverses back down and drops below the 21,340 level, approximately there, now this is where probably the bulls could get a little bit concerned here, as we could see some further declines here. But for us, let's say, to get bearish, let's say from the medium term perspective on this one, we probably need to wait until this drives back below this downside resistance line, and of course then we will target lower levels. But don't get me wrong, we still have some quite a big room here for maneuvering, and of course, like I said, what you could do here is, from the very short-term perspective, is if you see a drop below the 21,340 level, of course you could target this next potential area just slightly below the 21,000 level, and the one that I'm talking about is the 20,970 area, approximately there. But of course further declines are possible. There are some good potential areas here of support as well, like for example the 20,720, or even actually we could then retest this downside resistance line from above, and that could be a possibility, of course. But again, for such a scenario, we need to see initially a drop back below the 21,340 level. And if you look at this daily chart as well, this area here is just a few points lower below the 100 EMA, so could be that little indication as well that not everything is good in the bull block, and yep, we could see maybe a bit of a correction here to the downside. Now, of course, something else that you could keep a close eye on is this little, in a way tentative, but still something that could play out, this upside support line here taken from the lows of the 26th of December. Now again, like I said, if you see a drop below the 21,340 level, this is where it could potentially retrace lower, and this is what we will continue observing, just in case if it actually plays out nicely and holds the price from dropping lower, and we could then potentially see a rebound and a push back up again. So for now, guys, long story short, basically initially, of course, we are still aiming for this 200 EMA, which is around the 21,650 level, or if it's not able to withhold the bull pressure here, then yep, slightly above that we do have the 21,875 level, and this is the one that we're going to be targeting in case we see a break above the 200 EMA. Jumping into gold, now gold is a very tricky one, and today we're seeing a bit of a decline here. Now certainly this could be seen just as a correction, but in one of my videos this week I was talking about this little short-term upside support line, guys. Basically I was telling you to keep a close eye on it, and I was also telling you to keep a close eye on the 1333 area, approximately there. You can see that the commodity is currently getting held here near this level. Certainly if this continues to push further down, and to be honest, from the very short-term perspective, it seems that it could continue pushing lower. We could maybe see a retest of this 1326 level. Now don't get me wrong, if we do see the price moving towards that area, if it continues to hold, we could see maybe a rebound and a push back up again. So in a way, what we're gonna be looking at here is we're gonna probably play it a little bit more safe, and wait until we see a nice good push above the 1346 level. This way a nice good break above that could confirm a forthcoming higher high, and of course then we will target the 1355 area approximately there, or even higher. But for now, guys, probably it's better to be safe than sorry. So it has also a good chance of traveling lower here, maybe retesting this 1326 level. Now you can see I do have an arrow here below that level. Now this could be that little confirmation of further declines. If we see a drop below the 1326, it would also place itself below this 50 EMA shown here as the red line, and on the 4-hour chart. So in a way we could see further declines here, maybe even actually a retest of this upside support line that has been running here from the lows of November last year. So that's why, guys, for now be very cautious. Certainly, like I said, it is trading slightly below this tentative upside support line, but if it decides to travel further down here below the 1333 level, keep your eyes on the 1326, and of course then we'll just take it from there and see what it wants to do further. If, let's say, this suddenly reverses back up and travels back above this upside support line, of course, like I said, still continue observing this 1346 level. Let's see if it breaks it or not then. Jumping into a few pairs now. So the Euro-Aussie, now this one is of an interesting one. You can see, looking at this 4-hour chart, so today we're having a nice push to the upside here, pushing away from around the 158.40 level, and from this pivot, and of course we already managed to kind of break through the R1, the R2, and even R3 of today, of course, but the pair managed to reach the area here near the 159.90 level, so from which you can see that it's kind of slightly retracing back down. Don't get me wrong, the day is not finished. We could see that buying activity kind of extending further, just because the Aussie is not feeling very well today. So And there, starting from the early morning, early European morning, we saw Aussie dollar retracing lower, but to be honest, I'll get to that point later. But for now, looking at the Euro Aussie, basically what you could keep on monitoring, like I said, is this recent high near the 159.90. A nice good push above that could of course lead this one a little bit higher, but don't get me wrong, we could see a bit of a correction at some point here, because from today's perspective, just from today's perspective, we are quite extended here to the upside. So in a way, a little small correction could just do for Euro Aussie here. And if, let's say, it struggles to get back below this little level here, and let me just put this one on the chart, and that's approximately around the 159.15 level. So basically, if the pair struggles to get below this level here, then we could potentially see the bulls jumping in here again and pushing this one higher. And you can see also this level, the 159.15, also kind of almost coincides with the 200 EMA, with the 200 EMA here shown as the black line on the 4-hour chart. So that's why, guys, for now, be very cautious. Certainly, it could continue traveling further, especially if it gets above the 159.90. But like I said, don't forget it's quite already extended to the upside here in today's terms, of course, and we could see maybe a bit of a correction at some point. So yep, that's why be very cautious with this one, be very careful. It is an interesting one. Certainly overall it continues to look somewhat more bullish, but again, given that the euro is also more could be affected by any negative news, so that's why, guys, for now, be very careful with this one. Keep on monitoring some of these key areas of resistance and support. So on the upside, we could be looking at this 159.90 level, and on the downside is the 159.15. so keep your eyes on down. And like I said, jumping into Aussie dollar, now this is what I was talking about earlier on. Basically, Aussie dollar getting hit this morning, and of course, now how it's looking at, of course, it's not really looking that great. So in a way, we could see further declines. Now this is where the holdup could occur, initial holdup, of course, near this 0.7080 level, approximately there. It's also coinciding with today's S3. So that's why, guys, for now, certainly this is looking more bearish than bullish. We could continue seeing this one traveling further down, and you can see that this 0.7080 level also acted as a very nice area of support here back on the 15th of February, also on the 13th of February, and even actually going further into history. You can see that here back on the 24th of January, it also held the rate from dropping lower, and also on the 25th of January. So that's why, guys, this level here becomes quite an interesting one, especially from today's perspective. We could potentially see further declines, but this is where the holdup could occur. But if the selling is that strong that it will drive the pair below the 0.7080 level, this is what we will focus on, is going to be the daily candle, and see if actually wants to if it wants to stay below the 0.7080 level. Basically, if it does stay below this, then yep, further declines are possible, even actually going towards the 0.7055 zone, which acted as a good area of support here back on the 11th of February and also on the 7th of February. So for now, guys, be very cautious. It certainly is looking more bearish than bullish. On the upside, well, this is the level that we're keeping a close eye on, the 0.7135. A nice good push above this could send this pair back towards these recent highs, or should I say the highs of this week. Yep, but again, for now it seems that it wants to continue traveling lower. Let's see if it does that. But if this suddenly drives back above the 0.7135, then yep, we could target these the highs of this week again. So be very careful with this one, and don't forget to have your stop loss in place. And the last pair I want to quickly touch on, I'm not going to spend too much time on it. Basically, USDJPY, very interesting one, but still kind of continues to trade above this above a few of the tentative, I would probably say a few of the tentative upside support lines. The bigger one being this one, taken from the lows of the 3rd of January. So this is the line we're still keeping a close eye on. Certainly it is declining slightly today. It's currently trading still below the pivot. There is a bit of dollar weakness coming in, but to be honest, for us, let's say to start looking at slightly lower levels, we need to see a nice good drop below this level right here at around 110.43. This way we could then target the low that we saw here back on the 15th of February, which was around the 110.25 now. But this is where it could become even more interesting for the bears, because if this one doesn't hold, if this fails to kind of withhold the bear pressure, then well, it could go back towards all the way back towards this psychological 110 level, where it also could meet this upside support line that I was talking about, the one that's running from the low of the 3rd of January. So that's why, guys, for now certainly it's better to kind of wait this one out, continue observing some of these key areas of resistance and support. So on the upside, it's this one that we're keeping a close eye on, around the 110.90. A nice good push above that level could lead the pair towards slightly higher levels. But if this decides to drop below the 110.43, now this is, like I said, we will start looking at slightly lower levels like the 110.25. But if that fails to withhold, then yep, the path could be opened back down towards the 110 level again. So for now, guys, yep, like I said, keep your eyes on these key areas of support and resistance. Okay, guys, I'll have to wrap it up here. Thank you very much for watching and listening. And if you want to join me tomorrow morning at my Traders Espresso, and that's 7 o'clock GMT time. But for now, I hope you have a wonderful evening, and I'll see you tomorrow. Bye bye.